Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
This is an honor, actually, with his service to the International Monetary Fund and now at Berenberg Bank. Holger Schmieding, a truly expert on continental Europe, on the core of Germany, the Netherlands, of France, all the challenges of Eastern Europe over to Ireland, maybe a booming Ireland, the challenges of the United Kingdom and across the Atlantic. Dr. Schmieding, thank you so much for joining on this momentous day for Germany. There was a point, and I clearly remember this in my youth, of an America after the war in absolute awe of Konrad Adenauer, is the gentleman who dragged Germany out of the Marshall Plan and out of the rebuild into something approximating a modern parliamentary system with all the distraction of the Berlin Wall. Would Konrad Adenauer know the Germany of this Monday morning?
Well, he would probably be quite disappointed because we now have right-wing fringe parties and left-wing fringe parties. Fringe in the sense of being at the somewhat extreme ends of the political spectrum. We have these parties with more than 1/3 of the seats in German parliament. That was clearly not the case under Adenauer or anywhere over the last decades. Germany is facing significant problems. The key is that the next government tackles the issues that people are worried about. This includes migration. This includes very much the lack of growth. If these issues are now not tackled forcefully, then the result of the next election in 4 years' time could be even worse.
The solution for Germany is, and this goes from a shadow Germany of the 40s and 50s to particularly the collapse of the wall and all the reunification of 89, 90, 91. Holger Schmieding, the speed of parliamentary process has always been slow motion by United Kingdom standards and, of course, by the fractious American standard. Can Germany speed up their parliamentary process given the challenges right now?
Well, given the challenges that we have to build a coalition first before Mr. Merz, the leader of the centre-right, will be chancellor, this is not easy to speed it up. The chancellor to be, Mr. Merz, aims to have the coalition talks over by Easter, which is about 8 weeks from now. That, by continental European standards, for building a coalition would actually be fairly fast. But at a time when we get almost every day news from Donald Trump out of the US, that is, of course, a problem. We have a bit of a, well, vacuum is too much of a word, but we have a bit of a period right now where Germany and Europe cannot really act fully. And that is, of course, a quite unfortunate thing at the moment.
Holger, it's being reported that the far-right Alternative for Germany, the AfD party, doubled its support to become the second strongest party with 20.8% of the vote. Is the expectation that that momentum in terms of growth for this party will continue going forward?
Well, first of all, the AfD fortunately did not do significantly better than opinion polls had projected beforehand. And it will now depend on the new government by Merz whether it can tackle the issues. The AfD really feeds on discontent, especially discontent about uncontrolled migration, where quite likely the new government will take a harsher approach. But it also needs the return to economic growth to dent the appeal of these parties at the left wing or the right wing part of the political spectrum.
The economic challenges, Holger, talk to us about really kind of what they are and in reality, what can be done to address them.
The economic challenges are that the core of the German economy, the Mittelstand, these small and medium-sized companies, which often have their dominant position in global markets in a tiny niche, that these companies are no longer investing as much at home as they should. They are unhappy about bureaucracy. They are unhappy about the political uncertainty that we had in the last 15 months during the demise of the old government. They complain about regulations, excessive business taxes, excessive payroll taxes. So we need to do quite a bit in this country to strengthen our core. It is less about fiscal space. Yes, we need fiscal space for the military, but it's mostly about the more difficult, arduous supply side pro-growth reforms, which include pruning of welfare benefits so that people see more reason to work rather than be on welfare, which includes a few other things, deregulation. If we get back to that, and there's a bit of a chance that we do get back to that under the new government, then the German economy can do well, as long as Donald Trump with trade war threats and his Ukraine policy does not get in the way.
If you're just joining us around the world, Holger Schmieding of Berenberg Bank with us with some very good answers, a learning process on the German elections, what it means for Europe, what it means, of course, for Germany, and of course, across the Atlantic, what it means for America. Again, with Berenberg Bank. Paul?
Holger, I think I speak for a lot of Americans when I looked at the map of the voting in Germany, and it really just surprised me the strength of the far-right alternative for Germany in the eastern part of the country, the geographic differences in political support here. Can you give us just a little history there and how the various parties and a coalition might try to deal with that?
Well, the map really looks stark. If you look at it in a sort of first past the post, which party came number one, where then we really have pretty much a clear east-west divide. This has many reasons. Part is that in East Germany, fear of economic transformation is more prevalent in the West. After all, the East had, after the collapse of communism in 1990, a very, very painful transition. Part of that is also that in East Germany, there is more of an inclination in the sense of let's rather do a deal with Putin, with the Russians, than give money to Ukraine. The East Germans have been occupied by the Soviet Union, the Russians, of course, for a long, long time. So that's a bit different. There's also in East Germany, there are a bit of a feeling of being left behind as for demographic reasons. Quite a few people from the more rural regions of East Germany have left for the cities partly in the West. Right. And so this left behind feeling is more prevalent over there. Again, the government needs to tackle deep-seated fears about migration, uncontrolled migration, and get the economy going in order to address that.
Part of the work of Bloomberg surveillance over the years, folks, and I think of American experts like Richard Clarida, expert on Germany at Columbia University, or Adam Posen at the Peterson Institute, are delicate questions. We do that now with Holger Schmieding. Holger, the great fear, not so much in America where I think it's distant, but what I see in the European press this morning is any sort of analog, not back to World War II, but back to 1918 to 1923, in the invention of something called the National Socialist German Workers' Party. Is it overdone as a media ploy? Give us a measurement, Dr. Schmieding, of the analog back to another time of the far right in Germany.
I think this is far overdone. The far right is not like that. We had a bit of a party, or we have a bit of a party called BSW, which tried to combine a kind of national tinge, harsh on migration, with a social tinge, a lot more welfare. And this BSW did not do that well. They only got just below 5% of the votes. It is much more a feeling of left behind. And what I said about the remembering the pains of transition that is behind the strength of the AfD in the East. And the AfD is a nasty party. And they do have some neo-Nazis, but it's an exaggeration to say we are back to, say, where we were in the early 1930s. I think an analogy for the political situation in Europe is much more like the one before World War I, you could say, where we had a lot of nations competing with each other rather than a European Union. Right. And what we now see is a bit of a rise of return to nation rather than focusing on European issues.
Dr. Schmieding, well, thank you for that. That was a very elegant answer to a very delicate question. Dr. Schmieding, if we have an isolationist America is posited by the President of the United States, how does that affect all of continental Europe and particularly your Germany?
it of course affects us a lot. First of all, we are relatively open to global trade. We depend on global trade. An isolationist America, a protectionist America is bad for American consumers with higher prices and bad for our companies, which can deliver and do deliver great goods. Even more importantly, an isolationist America that does no longer have a protective umbrella over its European allies means, of course, that we, have to do much more on our own to defend against Putin, and we really should do that. But it also, by putting into doubt the basic premise of NATO, we defend each other against any potential aggressor. That is an encouragement to potential aggressors. That is an encouragement to the nationalists. And that, of course, is something we would not like to see. All in all, to some extent, the Trump policy seems to boil down to, I don't like the European Union. I would rather have, without the European Union, the ability to deal with all these middle or small states in Europe on an individual basis, because then the American advantage would be big in each case. So getting rid of this kind of joint market, 450 million consumers in Europe, seems to be one of the things that's underpinning the Trump approach to Europe, which of course is a challenge to us as the European Union. Our common market is the basis of our prosperity and, to some extent, of our peace.
Holger, on immigration here in the U.S., it's relatively straightforward dealing with immigration. We know who's coming into this country. We know where they're coming, and it's just the political will to limit that if we choose to do so. How is it in Germany?
Well, we could close our borders much more than we have done. Of course, that would have repercussions on our immediate European neighbors, who might then be stuck with more of those migrants who actually want to get into the richer Germany. So there are European repercussions upon taking a harsher approach at the German borders. The ultimate solution is, of course, to be tougher on the German borders, to send the message to people far away, don't even try to come to us, because even if you make it to our neighboring countries, you may not make it to Germany. And second, to better protect the common external borders of the European Union, so that the uninvited migrants do not even get into any of the EU member states. It is a process that is on its way. European migration policy is being toughened, and the numbers are coming down. But of course, this is Europe, a process that takes time, and the populists feed off on what they think were past mistakes rather than on what is the current stance of policy.
Holger, thank you so much. Greatly appreciate it this morning. Holger Schmieding, delicate questions there in Germany. I hope that was informative. I learned a lot there.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Joining us now, Mike Wilson. He's Chief U.S. Equity Strategist at Morgan Stanley, and exceptionally well-timed here with a really smart Sunday note a bit ago on alpha over beta. Explain the Greek letters, Mike Wilson, to us. What is alpha, what is beta, and why does alpha win?
Hey, good morning, Tom. Yeah, I think most of your listeners understand this. Beta is sort of your market level risk where you just own the index, and then alpha would be your stock picking. It's that simple. And, what's happened in the last 3 months is that the index itself has gone sideways, but there's been great opportunity under the surface, and that's really the job of most investors, is to pick stocks and try to beat the. So it's a good outcome if it can sustain for active managers. And by the way, people say, stock picking market. It doesn't mean it's easy, but I mean it does feel like that's what we're dealing with.
It kills me. He puts at the end of his note, Paul, enjoy your Sunday. Come on, Mike, it's Sunday. Exactly. Mike, I'm looking at the Bloomberg Launchpad, and I got a 199 on the 10-year real yield. My idiot ambiguity meter is that's a slowing economy. When you look at Seth Carpenter and company's work, do you model in a slowing or level economy where we walk away from double-digit earnings growth?
Yeah, well, I mean, remember the economy is not always the market or earnings. And what we've seen in the last, I would say, really 3 years is an economy that looks fairly robust at at the aggregate level. You can talk about that at the consumer level or just in terms of GDP. But then when you look at earnings growth for the last several years, it's been pretty lousy for most companies until recently. Recently, we've seen a pickup. More companies are starting to grow again. And I attribute this to essentially the government being, crowding out, if you will, much of the economy. That is the reason we have inflation. The main reason we have inflation, too much government spending. Also, it has kept interest rates higher than they would be normally. So real interest rates at 2% is actually quite high, Tom, as you know, for the last 15 years. And we're such a financialized economy that that has had a sort of a braking effect on businesses that don't have easy access to capital. So I think the Fed right now is sort of in a tighter place than they probably want to be. They would like to cut rates, but they can't because inflation now is picking its head up again. So they're on hold. They're not going to raise rates in our view, but we're trying to find that equilibrium now. Like, how big should the government be? How can we liberate the private economy in a way where we have better velocity, kind of in the real private economy than just government?
Mike, I'm looking also at your chart book where you guys track what companies are actually saying on their conference calls. What's top of mind for corporate America? And I guess not surprisingly, one of those key issues is tariffs. How did tariffs kind of factor into kind of your view of inflation and maybe how the Fed will proceed and how that might impact stocks?
Yeah, well, I think the Fed has told you, pretty straightforward since December that the uncertainty around tariffs is another reason why they're probably going to take a pause on the rate cutting campaign. Now, remember, they have another lever they can use, which I think they will, which is to basically end QT finally, which is, a decent amount of repurchases then across the curve. They can probably start doing that in May or June. And that's another lever that they can sort of pull on. As far as companies go, I mean, companies are always, trying to incorporate these changes into their business models and how they're running their own companies. And tariffs are front and center right now because not only is that a potential headwind, but it's also uncertainty because, one day we have them on, the next day they're being delayed. And look, that's what companies have to manage that process. The good news is, I think, in the last round of tariffs back in 2018, a lot of companies did relocate some manufacturing, some final assembly to areas like Mexico. I think that may be one of the reasons why the president is going after Mexico, because that was kind of a backdoor way of avoiding tariffs on China. So it's just going to be, 6 months of uncertainty. And that's why companies are mentioning it because, they don't want to get caught, in a way where they're guiding too high and then tariffs end up being a headwind for their growth expectations.
On equity markets, we have Mike Wilson with us with Morgan Stanley, Bob Dole to join later. We welcome all of you on your commute across the nation on all of our different radio platforms. And on Bloomberg Podcasts, subscribe to YouTube. Working for us each and every day. Subscribe to Bloomberg Podcasts on YouTube. Paul?
Mike, we're going to hear from NVIDIA Wednesday after the close. That's one of the last big companies reporting earnings in this cycle here. What did you take away from this quarterly's earnings cycle, and more importantly, maybe the guidance you've been paying attention to?
Well, first of all, it shows that the fourth quarter was boom times. Now, some of that once again was government. Fiscal deficit was up 40% year over year, but also there was some excitement around just a clean election. Maybe a more pro-growth, administration, and so there was more activity in the fourth quarter. And so what we're seeing now is kind of just that rolling off a bit. That maybe we got a little ahead of ourselves. Higher rates and stronger dollar was weighing on some of the guidance for 25. Companies tend to do that seasonally, anyways. They want to lower the bar a bit at the beginning of the year. But then the other things that have been we've been focused on, really in no particular order: tariffs, as you already mentioned. Number two. We have immigration enforcement, which has been a huge fiscal boost and also a labor supply boost. And then we have DOGE, right? The Department of Government Efficiency. Right. They're off to an aggressive start. I'm optimistic I'm probably more optimistic than most that they can make some headway there. But remember, the more successful they are in the short term, the more growth negative that is in the near term before you get to the good stuff. And then, of course, the positive effects of policy like deregulation, maybe extending the tax cuts, those come later in the year. Those require congressional approval. And so that's just not, that's going to take 6 to 12 months. And so the bad stuff first, the good stuff comes later.
Mike Wilson, to get back to your idea that alpha is the way this works, and let's just generalize that as individual stock selection, what is the Mike Wilson process there? Is it securities research, Graham, Dodd, and Cottle bottom up? Is it a sell-side concept of looking at what's going to win? Or is it more factor-based where you're looking at different items and trying to figure out, like say, will momentum or something else win?
That's a great question, Tom, and it has changed over time. I think the main thing that's changed in the institutional world, anyways, is the time horizon. So, 20 years ago, I would say institutional investors were kind of in this 6 to 12 month time horizon. It's now, 1 to 3 months, and in some cases 1 to 3 days. So that's what's changed, and that means you just got to be really laser focused on kind of news at the margin, whether it's fundamental news around a specific company, whether it's a macro changing event that can affect certain companies differently. So all those things we look at, I would say that quantitative analysis and factor analysis has probably picked up the most. Most institutional investors now, including ourselves as advising them, use that tool, and it's quite helpful. As you mentioned, price momentum is probably the most important factor variable because everybody likes to perform. And I would say, that can also get you in trouble because what ends up happening is you end up, as I like to say, using price as your analyst as opposed to doing the analysis and then letting price follow. And I think that's just the world we live in now. Everybody's short-termism. I don't think that's going to change anytime soon.
Bottle that. For all of you worldwide, whatever your sophistication, what Mike Wilson just said there, and Paul Sweeney and I lived this, of where 3 years became 18 months and 12 months became 3 months, and what are we doing to window dress at the end of the quarter? The short-termism now, and how can you prosper by pushing against that, as Mike Wilson alluded to there. That was extraordinary.
Yeah, a lot of it, I think, coincident with the growth of hedge funds as well. Mike, what screens well for you guys these days?
Well, getting back to the stock picking, I mean, now this particular factor always screens well, but it's extremely important now is earnings revision breadth. So companies that are showing the ability to kind of continue to raise numbers, is you're getting paid for that more now than you normally do. You always get paid for that, but now you're getting paid for it more, and you're getting punished for it on the other side. The other factor that's really working is quality. Quality has been working really well the last 2 or 3 years because of that sort of crowding out feature. But in the fall, we saw a movement towards low quality, and then now we're giving that back. So large cap, quality, earnings revision breadth, those are the 3 most important factors. And of course, price momentum still is important as well.
How about on the industry side? What stands out to you guys these days?
So it's been consistent really since November. Financials, mainly the banks, as opposed to other financials and capital markets companies. Software, particularly relative to, say, semiconductors and hardware, they're less affected by tariffs. And there's some reinvestment now as we go from the enabler to the adoption layer for AI. That should benefit. Media and entertainment, not just
really?
Media and entertainment. Wow. And the traditional media entertainment names are doing well. Remember, those are mostly domestic businesses. Yeah, mostly domestic, yeah. And then, of course, services, consumer services, which is the one part of the private economy which is still doing quite well. Services is doing much better than goods.
Mike, I'm guessing from your clients you get a valuation question or two every day. Boy, this market seems expensive. How do you respond generally?
We don't get many questions on valuation anymore. I think people have given up on that metric. That metric has faded in its importance in the short term. Okay, and as I like to say, in the short term, valuation doesn't matter at all. In the long term, it's the only thing that matters. So we've seen, as rates went back through 4.5% on the upside, we identified that as an area where valuation would matter. It has mattered, but not to the degree that it has historically. So I'm not sure what's going to get us, for that to become in vogue again. But it's not an important factor at the moment.
Talk to us about breadth of the market, Mike. A lot of folks, and Torsten Slok today was just out with a note from Apollo just talking about the concentration within this equity market, particularly in big cap U.S. technology names, and how that's really, relative to the rest of the world, just getting more and more pronounced. How do you think about breadth or lack of breadth in this market?
Well, it gets back to quality. So, and I would say as bad as the concentration is in the U.S., we have like 5 stocks or 30%. It's even worse in places like Germany, where you have 3 stocks or 35%, or in parts of Asia. And what's going on is the same thing that's going on here, which is that people are crowding into kind of these large cap quality stocks. It just so happens that the U.S. has more of them. So, but in other places of the world, there's fewer of them. Why the crowding is even more so. So it's just more of the same. Basically, people, the markets are smart. They've crowded into what's working. What's working is large cap quality, particularly quality growth, and that because they have scale and they can operate in this world where perhaps rates are high. The government is a big part of the economy. You have a lot of uncertainty. Multipolar world. Geopolitics is, kind of putting pressure on certain regions. And, I think that continues for the foreseeable future. The thing that could change that, which I'm getting a little excited about, is if we can shrink the government. So imagine this. You have a recession in government. I'm not sure that would be that bad for the private economy. I'm not sure we're going to get that. But if we did, that would potentially change that dynamic.
Right. Mike Wilson, very quickly here, talk about enthusiasm. I mean, Michigan State taking out Michigan in basketball, that was like Big Ten classic, wasn't it?
Well, it was a classic for if you're not a Michigan fan. But
they can still come back.
The Big Ten is always competitive, Tom, as I like to say, in both basketball and football and other sports as well. So, and Big Blue has had a good run recently. So we're going to leave.
Yeah. I mean, they're in second place. And they have the 2 teams up top. A Big Ten is important. Why is USC in the Big Ten? Does Mike Wilson understand? Please help me.
So the kids
here.
from Los Angeles that come all the way to Piscataway, New Jersey to play basketball.
Oregon is in the Big Ten. Mike Wilson, this is un-American. I hope Michigan takes every victory from the way on, pushes those Westerners out of it. Mr. Wilson is with Morgan Stanley. Thank you so much, Mike Wilson.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So what you got to do for Bob Dahl, particularly having Mike Wilson on and then Bob Dahl is great. Bob Dahl with us, the Crossmark Global right now. Bob, you know what I did? I did all Ibbotson. So I go back to what I call the Guadalcanal low of 1942, and you strap out a log Dow Jones Industrial Average, and we're really not all that extended. I mean, we're out 1 standard deviation, but do you see an extension of prices right now? Do you see an exuberance right now that I'm missing?
Well, the way I see the exuberance, if there is any, I think you raised a good question, is about valuation. It's rare we see stocks selling at 22, 23 times earnings unless we're in a recession and have depressed earnings. Earnings are far from depressed, of course, and it's likely that those earnings are going to fall short of expectations.
I look at the total return from that 1942 low, Paul, Dow Jones, 7.7% per year. So there's that single-digit return we're talking about.
Bob, as Tom mentioned, we were just talking to Mike Wilson at Morgan Stanley, and I asked him, how many valuation questions does he get every day? And he says, not many. Is that in and of itself a reason for concern?
It is. I find the same thing when out on the stump talking to financial advisors. Very few questions about valuation. It's more about, the Trump agenda and AI and other subjects that generally they're looking for a positive answer. They don't want to hear the yellow flag of valuation.
So how do you try to frame that valuation discussion as either a headwind, a risk, or maybe not so much?
Yeah, my view is the valuation is a bad short-term indicator. We all know that. But you can look at the long-term returns, 1, 3, 5, 10 years after certain PE ratios, and it's over the 5 and 10 year periods, it's a great indicator. So it doesn't tell us markets are going to have subpar returns starting tomorrow for the next 3 months, but it could mean for the next 3 to 5 years.
What do you do with Mag 7? I mean, Bob, you're too young to remember Nifty 50. But I'm sorry, maybe it's a nifty 7 is what we ought to call it. Yep, that's what people own, right?
Yeah, there's a lot of ownership. My accountant recommendation is own some Mag 7, but be underweight those benchmarks. It's a big weighting, as you know. And my fundamental backing is to look at quarterly projections of consensus numbers for the Mag 7 and then the other 493. Mag 7 growth rates are slowing, 493 are rising. That tells me I want to be underweight the Mag 7 and overweight the 493.
All right, we're about 85% of the way through this earnings season here, Bob.
That much.
What's your takeaway here? What have you heard? What's the guidance kind of suggest to you?
The numbers have been very, very good, with a few notable and visible exceptions, as you know. The banks, the financials out of the gates were just amazing numbers. The problem, in my view, is revenues were up 5%, earnings were up 15%. I can't expect margins to expand at that pace going forward.
Right.
And that's almost what's necessary to make the 2025 and now early 2026 numbers. They're for strong earnings gains. I think they're overstated.
Bob, we got a crushing market drawdown from the recent high. We're down 2.1%. I'm absolutely just crushing thing. This came up this weekend, and it's a phrase from years ago. Bob Dahl, if we get like a 10 or 12% correction, an 8% correction, dare I say 14% south, do shares move from weak hands into strong hands? What does that mean?
So generally, as you know, as we go down, more and more people want to sell. They don't sell at the top. They sell as things are moving down. So it would concern me somewhat. But I come back to not just the valuations, but the fundamentals. Are we in the face now of some sort of growth scare? Whether the scare leads to actual slowing growth, who knows? But when you look at recent housing data and the bad retail sales, the consumer sentiment numbers, the housing data, as I already mentioned, you have to wonder somewhat if things are going to slow down a bit. My guess is they probably will.
Bob Dahl, thank you so much. The Crossmark this morning. Just a wonderful way to get Monday started here.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The daily front page is the Lisa Mateo Hour. She was in at 1 a.m. working on this. What do you got, Lisa?
This is starting with the Wall Street Journal. So they're saying there's a shift in the housing market. Buyers are finally starting to get the upper hand again. Redfin is saying the average home now changing hands for less than 2% less than the price on the listing.
2%.
Yes. So the reason why, I know, growing list of supply of homes on the market. The houses on the market are there a bit longer. The most buyer-friendly area now is actually the Florida market, Miami and Fort Lauderdale.
Really?
Yes, because things are starting to change there, but it's not everywhere. They also point that out. They point out, like, for example, Wyckoff, New Jersey. There was this house there that sold $300,000 over the asking price for all cash. So it kind of depends where you live, but they're starting to see this shift. I'm starting to see it a little bit too, on a personal note.
Because you've been active.
Because I've been actively looking. I've been outpriced in New Jersey, but you know what? I went to Pennsylvania and I went under. And I went under.
Went under.
So now you have the extra, side place for the family to enjoy on the weekends, and you still get your place, but you don't have to be so competitive and be outpriced and frustrated.
What do you see on the short? I mean, it's
just
nuts.
Crazy.
It's crazy.
Yeah. And people buy something, and if it wasn't built in the last 10 or 15 years, they knock it down and build something new.
Yes.
Yeah.
Yep.
Yes.
Next.
Amazing.
Okay, so something new at spring training. They were testing out the robot empires. They had it in the minors like the past few years, but
yeah.
But see, the thing is that it's not actually a robot. So the umpire's there. The only people that can challenge it is the pitcher, the catcher, or the batter. Those are the only three people that can challenge it. And when they do, you only get 2 misses. Kind of like football, I guess, is the same thing. So that's a difference. But what they're finding is that they're not sure if it's going to work or not. I mean, it could be in 2026, but do people want this? Do the fans want it? Do the players want it?
It's not as clean as the incredible rule changes of 2 years ago.
Yeah, those were
It's
great.
all there is
Speeding
to
up
it.
the game. Yep.
Terry Francona, smartest guy on the planet, Do you know he's down to the Reds? He's out there, with the Cincinnati Reds. I gotta watch him this year.
We'll check that out.
Terry Francona says we're not going to do it because it's not going to be in the majors this year. Why? Distract. So I think it's like a year ahead.
Is it? Yeah, they're saying maybe 2026.
No, I've not.
But the thing is if you're a batter, and you see it and you know that it's not a strike, but you're mad and you don't want to strike out and you challenge it, well, you're risking. You
Is
only get
young
two
Mateo
challenges.
going to have this? Are we going to have,
in the
complain about
softball?
balls and
I don't know.
strikes?
I don't know. I don't know.
Next.
I don't know how the parents will take that one. Okay, the Mark Gurman. We had him in the studio last week. Okay, so his Power On newsletter actually asked a question. Do you go for the cheaper iPhone or do you go for the normal one? And he actually breaks it down. We're talking about the iPhone 16e. So it's $599, $170 more than the iPhone SE that it's replacing. So should you buy it? The price difference, he said it amounts to an extra $8 a month if you have that 2-year installment plan.
Yep.
And he says, you're not missing much by buying the 16 over the regular. He feels confident recommending the cheaper option as a good enough phone. So his basic advice, here it is, if your current iPhone is out of date, right? You're paying for new devices up front, you get the 16e. But if you're looking to upgrade to the more recent phone with the extra bells and whistles, paying on an installment plan, you spring for the standard iPhone 16. So he kind of breaks it down.
I mean, the issues he says, the various features, I didn't even know they were there. I mean, I don't even know what these features are.
It's a lot of a few camera features, video features, those kind of things.
It's basically a camera you can
there.
make a phone call with.
Okay, well, thank you, Mark Gurman, for being with us and profound with his release this morning of job formation in America. Lisa Mateo, thank you so much. The newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.